Asian markets extended gains on Thursday as optimism over trade deals between the United States and its key regional partners lifted demand for riskier assets. Japan's broad-based topics jumped 1.2% to hit a new record high following a trade deal with the US, while the benchmark Nikkei 225 rose around 1%. Singapore's Straits Times Index also scaled an all-time high, clocking its 14th consecutive session of gains, its longest streak on record. Overnight on Wall Street, the S&P 500 notched another record close, its 12th so far this year, after Google parent Alphabet beat estimates to kick off the Magnificent Seven earnings season. For more on this, we're joined by Milad Azar, market analyst at XTB MENA. Good to have you with us, Milad. Now, kicking off the Mag 7 earnings season, Alphabet has outperformed expectations. How do you see the rest of these tech giants performing this quarter?
Good morning. Happy to be with you today. Yes, Alphabet, Google kicked the earnings season in a very strong way. The 10th time they beat the revenue expectation. The 9th time they beat the EPS or earnings per share expectation, $96.4 billion in revenue, around 13% increase on a yearly basis. But in either way, what is more important for the investor was that all or most of those revenue are coming from the main sector, the Google ads, the Google advertising, and the Google search engine. Even with the existence and the existence of AI, still Google search is the #1 and dominating this sector around the world. That's why we can see the stock price is going near all-time high for Google, and we might see even a new higher level if we saw another euphoria in the market in the next few weeks.
Right, and looking at the trade developments now, despite reaching a trade agreement with the US, Japan's economy is still expected to suffer under the 15% tariffs. Do you agree with that?
Honestly, yes, and unfortunately, yes, we saw some boost and euphoria in the market. We saw the Nikkei 225 reaching a level close to all-time high. However, if you go deep into this agreement, it's right that we go down from 25% to 15%. However, what is more important is that investment of $550 billion of Japan money will go to the US, and even 90% of the profit should remain in the United States. That's one part. The other part of Japan is the election and the uncertainty that happened in the last week. And today we had the manufacturing PMI of Japan who fall down to 48.8% from expected 50.2. All those information honestly pressure the stock market on the long term on Japan. However, and moreover, because of the trade agreement now, OIDA and the BOJ have no reason anymore not to increase the interest rate. This means that the yen might get more power. However, the stock market in Japan will be falling in the medium term, if you want.
Milad Azar, market analyst at XTB MENA, thank you very much for your analysis.
Thank you.